So you're thinking about buying a home. You're going to do what most people do when they first start, which is go online and start looking at homes for sale on websites such as Trulia or Realtor.com. You're looking at the perfect neighborhood for you, and you finally find that dream home that you like, and you're looking at the price. Now, how do you know if you can actually qualify for that price? Well, the obvious answer is to go get pre-approved for a loan, and that way you can know exactly what you can qualify for. But let's face it, you're just at the start of your home search. You don't want to go through all of that right now. You just want to look at homes and kind of have an idea of what you can purchase. So stick with me and I'll show you a few ways to determine exactly what you can qualify for when looking for a home. Stay tuned. What's going on, guys? Once again, welcome back to my channel where I go over all things involving buying and selling real estate. My name is Rob Bailey, realtor in the Chicagoland area with Arnie Realty Inc. And today I'm going to help you answer the question of exactly how much mortgage can you qualify for. As a realtor, I've worked with lots of buyers over the years, and in my experience, when buyers first start looking for homes, they rarely ever get pre-approved before they start looking. They just simply go online and start looking at the homes for sale. While you may have an idea in your head about exactly how much of a mortgage you want to pay, how do you know if you will be qualified by a lender to be able to pay that mortgage? Sure, on Zillow and Realtor.com, they have a calculator that kind of gives you an estimate of the mortgage that you will be paying if you buy this home at a certain price, but most of the time it doesn't have all of the information that you really need. So once again, how do you know that you can actually afford the price that the home is listed at? Now, with that being said, let me tell you this. The only one true way to really know how much of a mortgage you really can afford is by speaking with the lender and getting pre-approved for a loan. Now, I know as a buyer, a lot of people don't want to do this until the very last minute because nobody wants to have to gather up all the paperwork such as check stubs for the past 2 months or your past 2 years tax returns. You really don't want to go through all that when you're just starting. You want to look at the homes. So, in this video, I'm going to help you estimate exactly how much mortgage you can afford so you can have a better idea of what to look for in your home search. Also, don't forget to hit that like and that subscribe button so you can be notified of when I come out with more real estate content in the future. Also, please feel free to let me know in the comments what real estate topics you want me to cover in the future. So, now the real question. How do you estimate exactly how much mortgage you can afford? Well, to do that, first I'm going to show you how lenders determine exactly how much money you can afford. Then I'm going to give you a way to estimate exactly how much of a mortgage you can afford without going to a lender. And finally, I'm going to give you a few tips to help increase the amount of mortgage that you can afford so you can help get the home of your dreams. Let's start out by looking into exactly how lenders determine how much of a mortgage they're willing to lend out to you. First is obviously your income. The more income you make, the more money they'll be willing to lend out to you. The good news is that when lenders look at your income, they only look at your gross income, which is the amount of money you make before taxes. This is why they like to check your last 2 years of W-2s and tax returns, as well as your check stubs in order to verify your income. The next thing lenders will look at is the amount of monthly debt that you owe. They will look at any monthly debt you have, such as a mortgage or a car note or credit card payments, student loan payments, anything like that. Also, remember that you don't have to include certain payments that don't come from loans, such as rent or utility payments or cell phone payments or things like that. Only count payments that come from a personal loan, such as a car loan or home loan or credit cards, etc. The more monthly debt you have, the less money lenders will be willing to give you because they will see you as a riskier buyer or more likely to not pay them on the loan. Now pay attention to this next part because it's very important. If you only learn one thing from this video, let it be this next part. Lenders like to determine how risky a buyer is by using something that's called a debt to equity ratio. Your debt to equity ratio is basically your monthly debt payments divided by your total monthly income. Most lenders require your debt to equity ratio to be at 43% or below, but they would prefer to see your debt to equity ratio at 36% or below. Any higher than 43%, they will not be willing to loan you any money because they will feel that you borrowed a lot of money and you may not be able to pay them back their mortgage in the future, and they'll see you as riskier. Let me give you a quick example of a debt to equity ratio. Say you make $60,000 a year, and say you have $1,500 a month in monthly debt payments. Divide the $60,000 by 12 and you'll get $5,000, which is how much money you make in a month. Divide the $1,500 a month in monthly debt payments by the $5,000 in your monthly income, and you'll come out to 25%, which is your debt to equity ratio. All right, let's move into the next factor that can determine how much of a mortgage you can afford, and that is the amount of taxes on the property. This is often overlooked by a lot of buyers, but it is very important in determining exactly how much of a mortgage you can afford and if you can afford that home in the first place. For example, if the taxes on a property are $8,000 a year, you aren't going to be able to afford the same amount of a mortgage than a similar home where the taxes are $4,000. The reason is because since the taxes are twice as high, your mortgage payments are going to be twice as high, which means you're not going to be able to afford as much of a mortgage because the payments will be higher. I run into this problem all the time with my buyers. Say, for example, I have a buyer that's pre-approved for $300,000 and they want to start looking for homes in Chicago where the average taxes are, let's just say, around $4,000. From there, they decide they want to start looking in the suburbs where similar $300,000 homes have taxes that are more in the $8,000 range instead of $4,000. Now they find out that they don't qualify for that $300,000 and that home in the suburbs because the taxes are too high, so they can't borrow as much money. It's very important to pay attention to the amount of property taxes. When you finally get pre-approved by a lender, make sure to check with them to see what they estimated the amount of property taxes to be at. That way you don't run into the issue of finding a home that you think you're qualified for, but then finding on down the line that the taxes are too much and you can't afford the home. The last factor that helps lenders determine how much of a mortgage to lend you is your credit, or particularly your credit score. Your credit score is basically a record of the debts you paid and if you pay your debt on time or not. Your credit score will determine your interest rate, and we all know the higher your interest rate, the higher your monthly mortgage will be. So you want your credit to be in tip-top shape so you can have a lower mortgage payment and be able to afford more of a mortgage. Once again, I'd like to mention that the only real way to really know how much mortgage you can afford is by speaking with the lender and getting pre-approved. However, I know not everyone wants to do that, especially at the beginning when you really just want to search for homes and to see what's out there. So, to help you with that search, I've made a mortgage calculator that will help you easier understand or better estimate exactly how much of a price you can afford with your income and your monthly debt. All you have to do is click on the link that I put in the description and it'll take you to my website to what's called a price affordability calculator. From there, all you have to do is put in your info into the calculator, such as your annual income and your monthly debt and the property taxes of the homes in your area, and it'll give you a price estimate of what you can afford as far as buying a home. Once again, full disclosure, this is only an estimate of the price that you can afford. Just use this to have a better idea of exactly what you can afford. That way you can look for homes that are more in your price range rather than looking at expensive homes only to find out later down the line that you don't qualify for them. Now for my favorite part, let's talk about some ways that you can increase the amount of mortgage that you can afford. The first thing that you should do is work on lowering your monthly debts. Lowering your monthly debt by a little bit will increase the amount of mortgage you can afford by a lot. I mean, just lowering your monthly debts by $100 a month can allow you to afford more than $10,000 over what you could have afforded before. So make sure you focus on getting down those monthly debts and paying them off. It'll not only help your credit score, but it'll help your debt to equity ratio a lot. The next thing you need to work on in order to be able to afford a higher price home is to start saving up your money. The more money you have, the higher a down payment you can make. The higher a down payment you can make, the more money lenders will be willing to lend you. Also, if you make a down payment of 20% or more, it will wipe out what is called private mortgage insurance, which is just basically an extra $100 a month you'll have to pay. So you can wipe out that $100 if you can make a higher down payment. So that'll allow you to be able to afford more of a mortgage. Alright guys, that was my video going over what determines exactly how much of a mortgage you can afford, as well as some tips to help you increase that amount and an estimator that you can use to help you better search for homes. Any questions or comments, please feel free to reach out to me either through the comments below or through my website, which is BaileyAcresProperties.com. Once again, my name is Rob Bailey, Realtor in the Chicagoland area with Arnie Realty Inc. Thanks a lot, guys. Have a good day.